Mello-Roos. What the heck is it? Hey friends, unless you've been living under a rock in our area, you've probably heard the term Mello-Roos. But what exactly is it and how is it calculated? You probably have a vague understanding of what they are. Most people do. But most people just think in its additional tax, but they don't really know what it is exactly or how to determine if a property has it or not. A Mello-Roos is an ad hoc California tax district created to finance an infrastructure project. By ad hoc, it means it was created for a specific purpose and for a specific need. A district may be created with only the approval of 2/3 of the voters, and it permits a special tax to be assessed on its residents. The state law allowing these districts was implemented around 1982 as a way for local governments to bypass the state cap's property tax increase that was done in about 1978. A Mello-Roos Community Facilities District, which is often referred to as a CFD, may be created by a city, by a county, or even by a school district. The Mello-Roos allows for one of these entities to sell bonds in order to finance a specific project or service. Projects permitted under California law range from infrastructure improvements like schools, parks, and childcare facilities to even police and fire services. A Mello-Roos is a special tax assessment district created for California to finance these infrastructures. Fun fact about Mello-Roos: the Mello-Roos tax is named after the sponsors of the law, California Senator Henry Mello and State Assemblyman Mike Roos. So thanks to those two. I bet you'll sleep better tonight knowing that. But the Mello-Roos is often used to create an infrastructure or support services around new developments. It also provides a way to make improvements in older, less affluent neighborhoods that are no longer bringing in enough revenue to cover those services. The pros and cons of Mello-Roos are that advocates of the Mello-Roos law say that it makes new housing construction possible and at a lower cost to eventual buyers. A developer planning a new community could either balk at the price of funding a new infrastructure and in turn pass on those costs by raising the prices of the homes. Opponents to the added tax say that it burdens the potential residents and could cause a problem in selling homes down the road. Keep in mind though that just because a house or an area doesn't have a Mello-Roos or has low Mello-Roos now, it doesn't necessarily mean that there could never be any. It could be up to the voters to decide. There could be the need for a new school or new infrastructure improvements that the voters could pass and create a new Mello-Roos. So how do you calculate it? That's a question we get asked a lot. And another one is why is one area have one Mello-Roos and another one has something different? Really, it depends on what bonds were sold and which ones are still outstanding. If you reach out to a professional like myself, we can give you the line items that are listed on the property tax's annual bill. It can vary greatly from community to community. Most of our region's newer construction definitely has Mello-Roos. Occasionally, as an incentive, the builder may actually pay off the Mello-Roos for a specific property. So that is a possibility and something that we do run into from time to time. You really want to talk to a professional like myself so that you know exactly what the Mello-Roos are and how to account for them in your monthly payment. You may see a house for $30,000 less in purchase price, but your monthly payment might actually be higher depending on what specific Mello-Roos are in place. So don't hesitate to reach out if you have general questions about Mello-Roos or if you have a question about a specific property or neighborhood. We would be glad to help you with that. My information is listed in the description, so thanks so much for watching because we want you to love where you live. See you soon.